from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Bitcoin drops below 40,000 for the first time in months. We'll talk about the implications of continuing volatility. Plus, an $11 billion acquisition for Take-Two Interactive buying mobile game maker Zynga. Take-Two CEO Strauss Zelnick talks to us about the strategy behind the move. And later, both Pfizer and Bayer strike major deals on gene editing. I'll speak with the CEO of one of their new partners, Mammoth Biosciences, about the future of this controversial technology. We'll get to all of that in a moment, but first, stocks rebounding after a massive sell-off. Our Ed Ludlow here with the latest. Ed, is this a sign of hope after such a grim start to the year?
Yeah, it seems like dip buyers have come in to kind of steady the ship in equity markets. It's been a topsy-turvy session on Monday. You see green on the screen now, the Nasdaq 100 closing up just 0.1%, but you'd seen heavy losses earlier in the session as yields rose. The same themes we've been talking about. Interest rates are coming sooner and they're coming quicker, and that's weighed on technology shares. But by the afternoon, we changed direction, and you see in the green pretty much broadly across technology, the Philadelphia Semiconductor Index up 0.25%, but had been under pressure as well. And you can see here the US 10-year yield at 1.76%. And it had been a little higher throughout the session at 1.81%, but then gave up a few basis points. This is really interesting, of course, in the equity market story, because there are specific names out there driving the narrative. I want to focus on Tesla to start with. Tesla really interesting because it had 4 straight days of declines, but you see closing up 3%. A Bloomberg News scoop that the HR chief, one of the most senior black executives as well at the company, is leaving for a new role. That was pretty much the only piece of news. Take-Two Interactive Zynga, you've been talking about this, was one of the big deal stories. In fact, it's one of the biggest games deals we've had for some time. Cash and stock deal valued at around $11 billion. Zynga obviously acting positively because it was such a premium to Friday's closing price for Zynga. Finally, I want to talk about Moderna, up almost 10% on news that their 2022 order book for a vaccine is at $18.5 billion. We also got some breaking news after the bell, Emily. You love a bit of breaking news, of course you do. Turo, the car sharer, the app that you go on to borrow somebody else's car, has filed for an IPO. It's going to list on the NYSE, the New York Stock Exchange, under the ticker TURO, of course. And for the time being, we don't know much more than that. It has a placeholder offering amount of $100 million. We know, of course, from our experience with IPOs over the years, that they'll come back probably with a larger offering amount. I want to finish on Bitcoin. As you said, it's been a volatile start to the year for the cryptocurrency. Its worst start to a year pretty much since the genesis of cryptocurrencies. You can see at one point during Monday's session, we dropped below 40,000. We then paired back, but really interesting to see a similar move that we saw in equities in the crypto space, particularly in Bitcoin. Emily.
All right, Ed, thank you. I want to continue on Bitcoin's rough start. That continuing, the cryptocurrency dipping below $40,000, as Ed said, for the first time since September, on pace for its worst start to a year in its 13-year history. I want to bring in Bloomberg's Emily Graffeo to unpack all of this. So, Emily, the big question is, how much lower can it go, or will it?
That's a tough question. I obviously don't have any price targets, but it does seem to be holding that 40,000 level. Bloomberg Intelligence says 40,000 is kind of a key technical level. And so it dropped below that. It seemed to bounce a little bit. Now we're at 41, but it's interesting to see what's going to happen this year. JP Morgan had a survey out this morning. They asked their clients, where do you expect Bitcoin to end in 2022? It's interesting. If you look at that survey, 41% say they see Bitcoin ending 2022 at 60,000. And if you remember, the record high in November was 69,000. So that means not really an exciting year for Bitcoin, according to these clients.
What and who is behind most of the selling?
It's hard to tell exactly who's behind the selling. I did speak to Noelle Aitchison from Genesis Trading, and she said that right now she sees a lot of the selling coming from short-term traders, which kind of plays into this idea that perhaps a lot of people who were buying Bitcoin in 2021 were viewing it as a speculative play. They had a little bit of extra stimulus cash, and now that that stimulus is kind of pulling away as we get a more hawkish Fed, they're taking some profits. She said she actually sees long-term holders of Bitcoin accumulating, perhaps buying the dip a little bit right now.
So what comes next, in terms of the technical levels? What are we watching?
So again, I'm going to be watching that we maintain that 40,000 level, but I think when we look to the year ahead for Bitcoin, it's really going to be another year of just figuring out, what do traditional finance people, what is their use case for Bitcoin? And then within the crypto community, how does the crypto community see Bitcoin as well? It's interesting, ever since we had that hawkish pivot from the Fed and we started to see Bitcoin come off from its record high, I've been hearing a lot of people from crypto, but also from traditional finance say, hey, you know what? Bitcoin is kind of trading like a risk asset right now. It's not really that inflation hedge. It's not really the uncorrelated asset that a lot of, I think, Bitcoin bulls hope it to be. They're saying, not yet. It's really a risk asset right now. And so if we see stocks continue to drop, we'll likely see Bitcoin drop.
All right, Bloomberg's Emily Grafeo, thank you for that update. I want to stick with crypto, talk about what 2022 will bring, and bring in my next guest, Kristen Smith, the executive director of the Blockchain Association in Washington, D.C., an organization focused on improving public policy around cryptocurrency. Kristen, look, this has been quite a year in the year leading up to this. What's your take on where cryptocurrency goes next and when this looming regulation actually comes down?
Yeah, well, I think, listen, if you look at the prices that were just discussed, obviously, it's been a little bit of a disappointing week for folks in the crypto community. But I do think in the long run, there's a tremendous amount happening in this space. I think Bitcoin is going to continue to be strong. But if you look into some of the other areas, if you look at the layer 1 blockchains that are being built out, if you look at the number of developers that are leaving Web 2.0 companies to come work in this Web 3.0 space. There's a tremendous amount of activity going on DeFi and computing, with gaming, with NFTs. So I think that 2022 is going to be the year of development, of bringing some of these use cases to a broader audience. And so those of us in the crypto community in the industry right now are very excited, despite sort of the rocky prices that we've seen at the start of the year.
Now, there's been increasing attention, Kristen, from policymakers, and one of the representatives, Brad Sherman, even started a coin trend after going so far as to say, what else are we going to do? Mongoose coin? Well, that's exactly what happened. Take a quick listen to what he had to say.
Now, the number one threat to cryptocurrency is crypto. Bitcoin could be displaced by Ether, which could be displaced by Dodge, which should be displaced by Hamster coin. And then there's Cobra coin. And what could Mongoose coin do to crypto coin?
How would you describe the relationship between Washington and the crypto community at this point?
Well, I don't think that Brad Sherman is representative of where most policymakers are at. I think if you look over the past couple of years, it was originally just a very small group of sort of devoted policymakers that were really trying to wrap their heads around it. But after this infrastructure fight, where there was a crypto provision tucked in legislation that the Senate was considering this summer, it became very clear that the cryptocurrency community is incredibly active, incredibly interested in being part of the process, and that they want to do the level of education. We also see companies in this space that are hiring professionals in Washington, D.C. Our membership of the Blockchain Association has skyrocketed just in the past couple of months. The crypto industry is here to be a partner with policymakers. They want to explain why some of the old regulations don't necessarily make sense or can't work with the current crypto networks. And we want to be able to find new ways to reach the same public policy goals that we have in other areas, whether it be with internet policy or with financial services policy, but do it in a way that makes sense for the way that crypto networks are structured. So we're really optimistic. We think there was a very positive hearing at the end of the year in December in the House Financial Services Committee, and that we're in a great position this year to get the education level much higher within the policymaking community, so that we can then move forward with debating on how we should change the laws for crypto networks.
Now, everyone right now is concerned about the price, in which direction cryptocurrency is going. Of course, we're seeing another low for Bitcoin today. Your head of policy tweeted that perhaps a crypto bear market has a silver lining in that it could lead to some regulatory relief. Would you agree with that?
Yeah, no, I do agree with what Jake said. I think he sent this tweet out last night or early this morning. But his point was that, it takes some of the pressure off, right? When you have skyrocketing prices, that draws a lot of attention, both in the headlines and in turn, with policymakers. This allows us to step back, to have a more sort of healthy conversation, to talk about, some of the pros and the cons, right? Like, this is still a very young industry. The technology is very young. Some of the applications that are being built are only in the early stages, and we need time for the kinks to get worked out, for things to get developed. And so I think it's actually healthy for policymaking to have these conversations and do the education when there isn't all of this excitement and sort of euphoria around rising prices. So yeah, we're certainly going to continue to push forward to educate lawmakers, regardless of where prices are. But yes, it does allow us to have a more sort of a more thoughtful and conversation.
All right, Kristen Smith, Executive Director of the Blockchain Association. Lots to continue to watch this year. Thanks so much. Meantime, PayPal is exploring the launch of its own stablecoin as part of its cryptocurrency push. The company confirmed the development of a developer-discovered hidden code inside its iPhone app. Stablecoins are cryptocurrencies backed and priced by the value of an existing currency or commodity. All right, and we have some breaking news that Meta, of course, the parent company of Facebook, is requiring its staffs to get COVID booster shots in order to re-enter the office. This, according to a report in the Wall Street Journal. Meta saying that they're also pushing back their return to the office to sometime in March. That's slightly more liberal than some of the other companies we've seen so far this year. Lyft, for example, pushing back the return to the office until 2023. Of course, we'll continue to watch, but of course, the news that Meta is now requiring staff to get a booster shot in addition to a vaccine to come back to the office. Coming up, Red Dead meet Farmville. Take-Two Interactive buying mobile game developer Zynga. Why Take-Two stock is tanking on news of the $11 billion deal. We will explore next. This is Bloomberg. Video game developer Take-Two Interactive is finally getting into the world of online gaming with its deal to buy Zynga, perhaps best known as the maker of Farmville. Take-Two CEO Strauss Zelnick joined Bloomberg's The Close to talk about the deal.
We're thrilled to be combining with the team at Zynga, and we expect to fold T2 Mobile Games, which is our mobile games division, into Zynga, as Zynga will remain the brand and will be responsible for running the mobile titles that exist at Zynga already and at T2 Mobile Games. We have an unusual structure at our company. Our labels have a great deal of autonomy, and while we share cultural attributes, we're incentivized in the same direction. Rockstar Games, Private Division, 2K, and soon Zynga, each have the ability to pursue their own destinies, pursue their own passions, and reward their creative folks. That method has worked for us really well.
But talk to us about where the synergies do come, in particular, the assets, the IP that you can use from one use case to the other.
Well, it's a great question. We've already said that we expect to identify something like $100 million in annual cost synergies relatively soon, within the first 2 years. You weren't really asking about costs. We've also said that we believe there will be something like $500 million in annual run rate revenue synergies. And that doesn't include game titles. That wouldn't include, for example, taking Take-Two's legacy console and PC intellectual property and bringing it to mobile, something we very much hope and expect to do with the help of the team at Zynga.
You know, I'm curious, Take-Two stock is down almost 15% on the day. What kind of conversations are you having with investors right now to convince them that this is the transformative deal for Take-Two?
we're talking about the long term. And while no one is cavalier about any day's trading, after all, there are investors on both sides of that trade. We're concerned about all of our investors. The truth is, our story has been one where we've tried to make intelligent, creative moves over a long period of time. And in the fullness of time, we've generally outperformed the market and our peers. So in this instance, we think the industrial logic is unassailable. However, we'll have to work very hard to deliver that over a number of years, and I'm convinced that we will do so. We always trade ultimately in the fundamentals. I never argue with the market in any given day.
Fair enough. And I mean, to Shonali's point, though, I mean, this is a huge deal. I mean, it's said to be one of the biggest acquisitions in the gaming industry. I believe it's definitely one of the biggest acquisitions for Take-Two here. And there are a lot of people that look at how you digest this, not only from the integration standpoint, but of course, how you pay for it with regards to the split between cash and the share price here. Do you have enough confidence here to be able to tell the analysts and the investors out there that this is effectively a profitable deal?
Well, it's very much going to be an accretive deal upon closing, which we expect in our first fiscal quarter of next year. We've said all along that we're willing to pursue inorganic opportunities when there's a great team. There's a great team at Zynga. When there's great intellectual property, Zynga has unmatched intellectual property in the mobile space that they own and control.
Take-Two CEO Strauss Zelnick there. For more on this deal, I'm joined by Jason Schreier, who covers the video game industry for Bloomberg. Jason, what's your take on the deal and why investors aren't too excited about it?
Hey, Emily, thanks for having me. So we are talking about a company that is slow to get into the mobile business. All of Take-Two's rivals, Activision, EA, Ubisoft, had their own big investments in mobile already. And so Take-Two is jumping in with this massive, massive acquisition, and investors are looking at that and saying, hey, is this not only too late, but also too much money? Why are they spending so much money? It is not only one of the biggest video deals we've seen in the video game industry, it is the biggest, dwarfing the acquisition of Supercell by Tencent and also the acquisition of ZeniMax by Microsoft. So it's a really big one.
So what's your take, three, I suppose, on why they're doing the deal and whether or not it'll work? What value will it bring to both companies?
So it's got two things. I mean, for Zynga, this is the ultimate heist because they are getting purchased at a premium way above what their share price was. And so it's a fantastic. They've been looking for a buyer for a long time. For Take-Two, they get a couple things, and there is some value to the deal. They just overpaid for it. They get a stable of games, including a few that are already on top of the charts. Zynga has a poker game that has been doing well for a very long time. They have a couple slot machine games. They have some hyper casual games that are making some money. But more importantly, to Take-Two, they get a stable of experienced game developers who can make free-to-play games for phones. And so Take-Two has these massive, massive franchises, including Grand Theft Auto, which Grand Theft Auto 5 is the biggest game on the planet, that have not translated well to mobile so far. And so Take-Two, their main goal for doing this is to say, hey, we need this company that can help us build a free-to-play mobile Grand Theft Auto game, and that thing is going to print money.
How does this shake up the broader video game landscape? Specifically, what does it mean for competitors like Activision and EA?
Yeah, I don't think it means a whole lot because Activision and EA already have such strong entrenched mobile businesses. I think they might be a little bit worried about what a potential mobile GTA game is going to do to their own respective mobile games. But even there, I mean, the audience on mobile is so big that you have a lot of these companies just going after such a big audience that there's room for everybody to get their player base. Activision, between Candy Crush and Call of Duty Mobile, has reached so many players already. EA, they have Star Wars stuff, they have Simpsons stuff, they have all sorts of various. EA has been doing mobile games for 12 years now. So this is not a case where I don't think Take-Two's rivals woke up this morning and said, oh man, what are we going to do about this? I think they said, wait, they paid how much?
Meantime, Activision has been fighting its own workplace agitation issues, allegations of discrimination and sexual harassment. What is the latest on that and the challenging of CEO Bobby Kotick?
Yeah, I was actually just texting with someone who is at their office in Wisconsin, Raven, where actually QA people, the testers of the games, are on strike and have been for a few weeks now since some layoffs hit. Yeah, Activision has been facing all sorts of controversy over the past few months. A lot of people expected, including me, I expected Bobby Kotick, the CEO of Activision, to step down after a massive bombshell Wall Street Journal report hit in November that accused him of his own misconduct, said he was aware of all the misconduct that had been going on, but he has made it. And so there will be more to come. There will be more news coming out of there, and it will all be on Bloomberg, of course. One thing I'm looking towards as we move ahead into 2022 is the annual shareholders meeting, which usually takes place around June for Activision Blizzard. That's when the shareholders will decide, do we want to re-elect this current board of directors who are all Bobby Kotick's friends? And I am very curious to see what comes of that, what happens if a new board is elected, how the CEO position is handled after that.
All right, well, we'll make sure to watch that and watch your reporting on it. Bloomberg's Jason Schreier, thank you for all those updates. Coming up, Facebook parent Meta is going bigger in Texas. Details on Meta's plan to take over half of a 66-story tower in Austin next. This is Bloomberg. A few other stories we continue to watch. Intel is on the brink of losing its status as the world's largest chip maker. For the first 3 quarters of 2021, Samsung held a narrow lead in sales. The final numbers for the full year will be available late January, but it seems likely that Intel will drop to second place. Intel still produces the vast majority of the world's computer processors. The parent company of Facebook is going bigger in Texas. Meta Platforms has leased half of what will be the biggest skyscraper in the city of Austin. The company has 2,000 employees in Austin and is looking to hire 400 more. Both Samsung and Tesla have recently announced plans to expand in the area. And in China, a giant edtech company revealed it's fired 60,000 workers since the country launched a wide-ranging crackdown on private businesses over a year ago. The chair of New Oriental Education and Technology Group also said revenue fell 80%. Beijing banned tutoring companies like New Oriental from making profits and raising capital. Coming up, 2 of the world's biggest drug makers just announced they're diving deeper into the world of gene editing. I'll speak with one of the co-founders of Mammoth Biosciences about their new deal with Bayer, coming up next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Pfizer is getting into the gene editing business, announcing a partnership with therapeutics company Beam Monday. Pfizer CEO Albert Bourla spoke earlier with Bloomberg's John Farrow about the deal, which he calls a big priority.
Sometimes being a good partner provides better results than if you own a company. And right now we want to place multiple bets and collaborations. And we have proven that this works very well with BioNTech. So I don't say that you would not see also acquisitions from our side in this front. But right now, in these specific areas, we felt that partnerships will give us exactly what we want without dedicating amounts of capital that would be needed if we wanted to acquire the companies.
Well, that's what I wanted to ask. That's what I wanted to go to next. What does that mean for capital allocation elsewhere? What kind of doors does it open up if the strategy elsewhere is a series of bets and a series of partnerships?
Clearly, this is one of the top priorities that Pfizer and myself personally are having for this year. I wouldn't say it's the number one, because the number one, it is to stay ahead of the virus, to stay ahead of COVID. This is what the company needs to do because this is what the world needs. But clearly, number 2 priority it is to invest a lot of capital that it is accumulated, either through the normal course of business or through COVID. And that needs to be an investment on science. We believe that we have the machine right now, the clinical development machine, the manufacturing machine, the commercial machines. All these platforms are waiting for new science, highly breakthrough science, to come in and produce solutions for humankind. And this is where the capital will go.
Well, let's talk about the platform getting the most attention right now, mRNA. It's been met with hope, confusion, and to some degree, skepticism. Doctor, I'm trying to understand from your standpoint how you communicate to people the hope around this when we keep getting told we need another shot. If it's so good, why do I need a second, a third, and a fourth?
Yes. First of all, let me say what I think about mRNA. mRNA is not the holy grail, but it is a very, very powerful technology. It is a very powerful technology that has produced dramatic results, positive impact, and we are only scratching the surface. So our strategy and our vision, it is to harness the power of this technology to multiple other areas. The first area that is the self-evidence and the lowest hanging fruit, it is other vaccines of other infectious diseases. And this is something that we are doing mainly in partnership with BioNTech. We just expanded to a third target. You said why, if it is not good, is not producing longer lasting results. It's not something that is related with mRNA, it's something related with the virus. As you most probably know, or if you ask experts, the natural infection with this virus also doesn't produce big immunity. In fact, the natural infection in many times produces half the time that you can get in terms of how long you're protected than the vaccines. So it's not right to say that the mRNA doesn't create durable protection. It is this virus that is very difficult to tackle and mutates constantly.
Pfizer CEO Albert Bourla there. Meantime, Bayer and Mammoth Biosciences also announced a partnership to use Mammoth's CRISPR gene editing technology. Joining me now, Trevor Martin, the CEO and co-founder of Mammoth Biosciences. Trevor, how do you and Bayer plan to work together?
Yeah, we're really excited about this collaboration that we announced today because at Mammoth, we've built out this incredibly broad toolbox of novel CRISPR systems, including ultra small CRISPR proteins that can enable new ways of doing in vivo delivery. And this collaboration with Bayer is all about expanding their cell and gene therapy platform with these novel CRISPR proteins that can really enable especially these in vivo therapies that are exciting.
You're focused on 4 diseases, all liver-based diseases. Why those diseases, and where do you hope to expand?
So liver is the starting point. And in addition to kind of starting with liver, I think that the potential for these novel proteins that we're working on at Mammoth for these in vivo applications across many different organs is limitless. I think it has a lot of really exciting directions that it can go, but liver is a great place to start, and that's where we're starting with Bayer. But broadly, we're excited about the internal work we're doing at Mammoth. We're excited about the work with Bayer, and I think we'll see the power of these ultra small CRISPR systems in a variety of tissues.
Now, obviously, gene editing technology has been incredibly controversial. What is your company's approach to the ethics of gene editing? It's certainly one thing to cure someone of sickle cell anemia, but it is another to be able to choose the color of your baby's eyes or height and beyond.
So at Mammoth, we're really focused on these cures for really debilitating genetic diseases. And there's so many of these that we could have such a high impact on with patients that could be our focus for decades and hundreds of years and still not meet the full need. So I think that's what we're really, really focused on. And I think ethically, personally, that's what you have to focus on is, right? There's people that really could be cured permanently of these diseases if we can apply this technology in the right way.
What's been the impact of the pandemic on the gene editing sphere? Obviously, we know, how important mRNA technology has been. Talk to us about how the pandemic might be a turning point for gene editing technology.
Well, one of the interesting things is in the development of our CRISPR-based platform, one of the new uses of CRISPR that we've pioneered is actually diagnostic applications. And the pandemic has really accelerated our development of those technologies in that area. And you may have seen previously, we've announced collaborations and partnerships with GSK, the NIH, and DARPA. And I think really it's shown that CRISPR is something that can go toe-to-toe with gold standard technologies in the diagnostic space like PCR, and really offers the potential of kind of revolutionizing the whole spectrum of testing for infectious diseases, starting with COVID-19 and beyond, whether that's in the lab or that's in the doctor's office or even at home.
Meantime, we just got a historic verdict in the case of Elizabeth Holmes, as given that she was a young, then up-and-coming CEO and founder in the biosciences space. I'm curious what impact she's had on the work that you do and the work you're trying to do, and if you have any thoughts on it.
Sure. So at Mammoth, first and foremost, we like to lead with the science, and we've published many papers in top scientific journals, and we're very excited to explain to people how we use CRISPR across therapeutics and diagnostics. And I think it really just reinforces the importance of really just being transparent and open and getting people excited about how the technology actually works and helping them understand what it can do and what it can't do. I think it just really reinforces that for us.
Trevor Martin, CEO of Mammoth Biosciences, off a new deal with Bayer. Thank you for sharing that with us. Coming up, how to bridge the skills gap. With the Great Resignation underway, one edtech startup says they want to help upskill 1 billion people in the next 10 years. More on that next. This is Bloomberg. There is no end in sight to the Great Resignation. At the same time, it's estimated that 1 billion people will be needing new skills by 2030. Bridging that gap is exactly the mission of Career Karma, an edtech startup that just raised $40 billion to expand their operations. Joining me now, the startup CEO and co-founder, Ruben Harris, to talk more about this changing work landscape. Ruben, great to have you with us. What's the main problem Career Karma is trying to address?
Career navigation. So we help workers find job training programs to get them jobs in tech. We started with boot camps, but we're using this $40 million to expand into higher education and the enterprise.
Now, we've heard a lot about the Great Resignation, people reconsidering their job opportunities. Talk to us about some individual stories and how Career Karma has helped students and people navigate these big decisions.
Yeah, we actually have a group of people. They're called the Young and Ambition Squad. So they meet regularly inside of our live audio rooms. There's a lady named Sydney Sampson. She used to work for DoorDash, just got a job at Accenture. Another lady named Lanice Powell. She was a teacher, just got a job at an edtech company called Newzella. And many others in her group that are not just getting jobs at traditional tech companies, but even at Fortune 500 companies like Lowe's that are doubling down on their digital platforms. Career navigation is mostly psychological, not technical. And so after we match people to different schools, we're able to actually connect to different peers and mentors in our audio rooms, which is where they met. And there's several other stories like that as well.
Now, one of the reasons, as I understand, Career Karma is so successful is the impact of personal coaches and career counselors, which are expensive, I would think. How do you scale that to 1 billion people, which is your goal?
Yeah, so, it's very hard to do that if you're going to be running an organization where you have just coaches that are on staff. But what we've realized is whenever you connect people with a shared struggle, they want to help each other. So, for example, Lanice was in a group with other teachers that were also going through a career transition that were one step ahead of her. And since they were already doing what she was trying to do, they were naturally willing to help them. We do have some people on staff that might host different moderation rooms just to keep community guidelines. But now that we have about 3 million people a month coming to our platform and thousands of people in our audio rooms, it's very self-organized, very similar to like a community like Reddit, where you might have a moderator and other people just participating in the community.
Now, we're seeing a lot of tech workers and crypto enthusiasts move to Miami, where I understand you're doing a lot of your work. I recently spoke with the mayor of Miami, Francis Suarez, who had this to say about the influx of new talent.
Our economy was driven oftentimes by hospitality sector and by construction sector, two of which are oftentimes not as high paying jobs. And so part of what we want to do is we want to differentiate our economy, and we want to provide higher paying jobs and better opportunities for our residents.
You've been talking about how to prepare Miami residents as an example for the future. Talk to us about how the work of Career Karma would intersect with what Miami needs.
We've been talking with Mayor Suarez since 2018 with a guy named Saif and Raul Moaz. I think it's going to take a collaboration of working with the government, the schools, and the companies to work with the local residents. To your point, there's all these tech people that are coming into the city. They're taking advantage of these jobs. And so what we want to do is work with the local residents to match them to different training programs that can get them jobs in less than a year. So there's training programs like WinCode and BrainStation that are inside of Miami right now. And we can work with local companies like a Royal Caribbean, for example, that are also doubling down on digital to figure out how to reskill and match those people to the jobs that are being created.
I'm curious how your own path as a CEO and founder who doesn't look like a lot of typical tech CEOs and founders, how that has impacted the mission and what you want to accomplish here. What's your personal experience been?
So I'm from Atlanta, Georgia. I've always been proud to be who I am. I've never been ashamed to be who I am. One of our investors is Arlen Hamilton. She uses a word called underestimated. So I've always seen that as an advantage. Part of the reason why going to Miami is strategic is not just because of the ties that we have politically and professionally, but also because not only am I Black, but my first language is Spanish. And a lot of these people that are susceptible to automation, 50% of the Miami economy is making $35,000 a year and it's susceptible to automation. So we could actually relate to them in a better way. So we want to be working with not just the city of Miami, but the rest of the nation and all over the world to figure out what is the playbook to make sure that as the tech world continues to grow, because last year was a historic record, $300 billion in capital invested, that areas aren't gentrified. And so that's what we're thinking about. So I see it as an advantage.
Absolutely. You're also working with SoftBank, one of your investors. We had a couple of folks from SoftBank on the show last week. They said they're betting big on Web3 and crypto. Obviously, the metaverse is a huge trend. What's your bet? What's your vision for the future of education and some of these trends in the metaverse or this future internet that everyone seems to be talking about?
Yeah, so this Series B round was led by Top Tier, and shout out to SoftBank for doubling down. Our big bet is that we realize that we started with boot camps because it's the playbook that traditional schools are actually copying. And as the student loan bubble continues to go up, at some point it's going to pop, in my opinion. It's my personal opinion. And I think the education is primarily going to be funded by government, philanthropy, and employers, which is why we are actually expanding into the enterprise and offering Career Karma as a benefit, working with employers that want to pay for the tuition for current talent that wants to upskill, but also to attract talent. You've seen news like Amazon spending several $100 million to pay tuition for workers. You see PwC spending $3 billion, AT&T spending $1 billion, and now the World Economic Forum making a big push to reskill 1 billion people by 2030, which is not a coincidence. Well, it is a coincidence. That's also our mission. And so now you have employers, you have governments, you have tech people all doubling down, and Career Karma serving as a sole bridge to match workers, schools, companies, and technology and capital together.
All right. Career Karma CEO and co-founder Ruben Harris, good to have you here on the show. Thanks for painting a picture of the future for us. A story we continue to watch now, Goldman Sachs adding another Main Street brand to its Marcus consumer business. The firm announcing a new credit card with General Motors. It is Goldman's second major co-branding deal after the launch of a high-profile credit card with Apple. Bank used partnerships with name brand companies to attract their customers as borrowers. Coming up, Omicron hospitalizations have declined in the city of New York. Could the peak of the new variant be over? We'll talk about that next. This is Bloomberg.
After a modest product year in 2021, Apple's looking to step it up in 2022 with several new Macs, a revamped iPhone 14, new AirPods, and even the potential unveiling of its first mixed reality headset. Let's start with the iPhone. The company's planning a new iPhone SE with 5G for the first half of this year. Later this year, Apple will of course launch the iPhone 14 with a redesign and a hole-punch front-facing camera to replace the notch. Apple also continues to work on satellite messaging features for the next iPhone. The iPad Pro is destined to get its first design changes since 2018, complete with a new wireless charging system. You can also expect an updated mid-range iPad for later in the year. AirPods are also in for a big 2022, with a redesign coming to the AirPods Pro. Those are expected to get better sound and potentially get smaller with a shorter stem. The company's also considering releasing the AirPods Max headphones in new colors. Apple Watch users should look forward to 3 new models, including a new low-end Apple Watch SE, a high-end Apple Watch Series 8, and a brand new Extreme Sports model with a rugged casing. Mac fans can look out for a supercharged Mac Pro, the first of its kind with Apple Silicon, a new iMac Pro with a much larger display, and the biggest MacBook Air redesign in the product's history. The capstone of the year, however, could be the company's announcement of an upcoming augmented and virtual reality headset. So stay tuned for more on that. I'm Mark Gurman. This is Power On.
You can sign up for Mark's weekly Power On newsletter at Bloomberg.com. Meantime, COVID infections in New York City may have reached a peak. It has been about 1 month since the city's first case of the Omicron variant was identified. The 7-day average of people visiting New York emergency departments with COVID-like illness has dropped significantly in all 5 boroughs since the end of December, this according to the city's Department of Health. Bloomberg's Jonathan Levin joins us now with more. So does it mean the peak, Jonathan, has passed?
Hi, Emily. Well, it strongly seems like New York has reached a peak. Of course, what a peak really means in practice is another question, right? So typically, once we see that peak in the 7-day average of actual cases or infections, the impact on the hospital system can still go on and on for weeks to come, and that's what we expect to see in intensive care units in New York City.
So does that mean we could see more peaks, or that more potentially dangerous variants could still be down the line?
Well, certainly, in terms of the near and present, Omicron may be peaking in New York City and indeed parts of the Northeast, but you're going to see peaks at different times throughout the country, right? The West Coast, for instance, appears to be, days, perhaps a week or two behind the Northeast, and so you could yet see the worst ahead for your region.
Meantime, you've got the new law requiring vaccinations at companies with 100 employees or more that the Supreme Court has had under consideration going into effect. What's the latest on that and how it's working?
Well, all eyes are on what the Supreme Court is going to do. This has really become a linchpin of the White House's strategy to close the gap on vaccinations. And it's not just vaccinations, we've realized with Omicron. It's those boosters, too. It's only, the boosted who are really finding that they have significant protection against infection itself. Hospitalization and severe outcomes is another question, but in terms of preventing the infections themselves, this White House has really become quite dependent on the promise of boosters, and so all eyes are on that Supreme Court.
Well, Meta, Facebook's parent, just according to the Wall Street Journal, is now requiring its staff to not just be vaccinated, but have boosters in order to come back to work. Could we see more of that quickly?
It's certainly possible. The Omicron variant has really changed the game. We've seen some research, including out of the UK recently, that suggests that if you're 5 months out from your last shot and you have not been boosted, your protection against infection itself is only around 10%, right? So companies have to be rethinking their strategy at this point in the game.
All right. Bloomberg's Jonathan Levin, thank you for that update. Much to continue to follow. That does it for this edition of Bloomberg Technology. Tune in tomorrow. We continue our crypto coverage with Ava Labs president John Wu. We'll have his blockchain predictions for 2022 you don't want to miss. I'm Emily Chang in San Francisco. This is Bloomberg.